With gold stalling, is it Bitcoin's turn? Traders eye $95,000 as key breakout level. Wednesday's crypto rally stalled as Bessent reiterated the difficulties in making a deal with China. The crypto market's rally stalled on Wednesday after U.S. Secretary of Treasury Scott Bessent reiterated that a proper trade deal between Washington and Beijing would take years to ink out. Bitcoin, BTC, is up 2.6% in the last 24 hours and 12.2% in the last 7 days, trading at $93,600 for the first time since the beginning of March. The largest cryptocurrency was outperformed by large swaths of the market, with the CoinDesk 20, an index of the top 20 coins, excluding stablecoins, memecoins, and exchange tokens, rose 4.2% in the last 24 hours. SUI, SUI, jumped 24% in that period of time, while Cardano's ADA and Chainlink's Link both saw 7% gains. Crypto stocks, which opened strong, saw their performance dampen as the day unfolded. Miners such as Bitdeer, BTDR, and CORZ, CORZ, fell back from double-digit gains, closing the day up roughly 4%. Coinbase, Coin, and Strategy MSTR are up 2.1% and 1.4%, respectively. U.S. President Donald Trump seemed to be dialing down the pressure on China in the last few days, saying that tariffs on the Middle Kingdom would come down substantially on Tuesday. Bessent, however, said on Wednesday that the White House had not made a unilateral offer to cut tariffs on China, and that a deal between the two nations would take 2 to 3 years to achieve. A meaningful thaw in relations may not materialize until substantive news emerges from the upcoming Xi-Trump meeting, said Paul Howard, director at crypto trading firm Wincent. Markets priced in the initial tough stances and tariff threats, which kept a lid on risk appetite over the past 2 months, he said. History suggests that once the opening volleys pass, more constructive developments and easing volatility typically follow, Howard said, which could support risk assets such as crypto. In a sign of renewed investor demand, U.S.-listed spot BTC exchange-traded funds, ETFs, have recorded nearly $1.3 billion in net inflows this week so far, according to SoSo Value data. The funds booked their strongest day on Tuesday since mid-January. This crypto rally isn't retail-driven hype. It's institutional capital positioning ahead of what many see as a new monetary and political regime, said Matt Mina, crypto research strategist at digital asset manager 21 Shares. More investors are turning to it not just as a speculative asset, but as a flight to safety amid rising uncertainty across traditional markets. Despite the strong price action, Mina added that BTC is facing resistance at around the $95,000 level in the short term and could pull back. Gold, meanwhile, is down 2.5% today, trading at $3,290 per ounce after a run that saw the precious metal rise 35% to $3,500 in the span of 4 months, possibly hinting that the market could be moving past peak uncertainty. Gold stalling after a massive rally could bode well for Bitcoin, said Charles Edwards, founder of Bitcoin-focused hedge fund Capriole Investments. Posting a chart on X on Wednesday, he noted that BTC historically followed gold's gains with a few-month lag. Bitcoin is showing significant strength, Edwards said in an X post. We have decoupled from risk assets and the market is now starting to front-run the fact that Bitcoin is digital gold. If risk assets were to decay further from here, BTC is the ultimate QE, quantitative easing hedge. Read more. Bitcoin breaches Ichimoku cloud to flash bullish signal while altcoins lag. Technical analysis. Tom writes about markets, Bitcoin mining, and crypto adoption in Latin America. He has a bachelor's degree in English literature from McGill University and can usually be found in Costa Rica. He holds BTC above CoinDesk's disclosure threshold of $1,000. Christian Sandor is a U.S. markets reporter focusing on stablecoins, tokenization, real-world assets. He graduated from New York University's Business and Economic Reporting program before joining CoinDesk. He holds BTC, SOL, and ETH.